Yo, what's up everyone, and welcome to another video. So this video is about a NQ long forward test that I took on a paper trading account on TradingView. The date of today is August 12th, 2024. And as you can see right here, I did start recording a little bit late because I completely forgot. As you guys know, like my channel is like fairly new, or at least me posting videos on it is fairly new. However, that's besides the point. Right here you see I am in my trade, and I already have a TP set, and right now you can see that I'm setting up where I'm gonna go break even in a second. I also entered with 3 contracts, and for those of you who don't know, NQ with the contract sizes compared to MNQ, micro and NQ, is a lot different. So the contract sizes on NQ when you're paper trading, or honestly anything else, is you're risking a lot. So this trade, the amount of money that I make should not be like, you should not look at the amount of money that I make in this trade and say, damn, oh my god, like he would have made that on a real account. That's absolutely not true. This is over risking, and I don't really know how these contracts work because I trade the indexes more than I do the futures, but this is a forward test on the futures. It's practically the same. However, the contract sizes and everything was just messed up. So the numbers you see moving, like, yeah, they're big numbers, but you should mainly be focused on how I'm executing the trade, why I'm taking the trade, and whatever comes next. After this trade, I will be going completely over what I saw in the market, why I took this trade, why I stayed confident of staying in this trade, and why my TPs were set where they were. So I'm gonna time lapse a whole lot of this trade in this video because it took a while for full TP to get hit. However, the trade was really clean, really nice execution, and enjoy the video. Right, you guys might have just noticed that in the time lapse I actually moved my sell limit from those highs up there to the break-even mark, and we just hit TP1. The reason for that is because I kind of was going against my rules having TP1 at those highs, because one of my rules is TP1 should always be at a 1-to-1 risk reward ratio, and I should also go break even at first TP. So when I saw that like a 1-to-1 was really low down, I was like, I could be screwing myself right here. So I'm just gonna follow my rules, and I'm gonna put my TP there. As you can see, the TP got hit, and we put stop loss to break even. So absolutely beautiful, risk-free trade. Already made some money off of it. Obviously this is just a forward test, so it's not real money, but realistically, this is a trade I would have taken, and this is a trade I would have made money on. So all in all, it doesn't really matter. I put my second TP all the way up there where my old TP was, and this I'm more confident about. So let's keep pushing. All right, and TP2 is about to get smacked. Let's give it a second. 3, 2, 1. Where's the push out? Where's the push? And there it is. TP2 hit. Absolutely beautiful. I was thrilled to see this happen, because when I saw TP2 get hit, I was like, okay, wait, I might have not only just caught like a really good entry or a really good trade, but my TPs actually are working out. And it just really showed me that these months that I've been trading are paying off, because this was completely my entry model, with the confluences that I trusted in, and it was just absolutely beautiful. And it really makes me feel really good knowing that I'm on track, like I'm doing good. And I think everyone deserves to feel like that when they're pursuing something like this, especially in trading, considering how hard it is and considering who you're up against in the markets. It's really motivating to see something like this happen. Just even if it's one good trade, like even the small wins and the big wins, like all of them count. And you should love the journey, you should love the progress, and you should love to keep on going and experience more. So I also moved my stop loss to a 5-minute fair value gap that got formed within this trade. The reason why I'm trailing my stop here is because this is a big, but this is a big and fast expansion to the upside. And expansions like these, they could just be rebalancing price. However, I was not completely sure if this expansion was just going to be liquidity sweep and then we continue further down, because it did look like we were going to continue down. However, I did want to trim my stop, just still secure some profits if the price comes down. But the 5-minute fair value gap, I was pretty confident it wouldn't come back to it. So yeah, that's the reason for my stop loss right there. And let's see what else happens. All right, right here in a second, you will see what the reason was for my TP all the way up there. So here on the hourly time frame, we see 2 equal wicks. Now on lower time frames, these 2 equal wicks will translate to equal highs. This also applies for equal lows, but right here you see these 2 equal highs, and that was my drawn liquidity. You could say there's triple equal highs. However, I mean, I didn't want to go through a marking all that. So my final TP was the equal highs. I hoped it was gonna come and take it out, and then probably reverse after that. So yeah, let's see what it pushes from this point forward. All right, so right here, I didn't want price to reverse on me, so I trailed my stop to one 5-minute fair value gap higher for more confidence. All right, so right here, as you can see, the price is extremely choppy, and I wasn't entirely sure why we were chopping, so I decided to draw its standard deviation from this low to the breakup structure. And as we can see right here, in that 2 to 2.5 range, where usually a reversal happens or consolidation happens, we are perfectly in that range. So I was looking mainly to get a tap out of this, and then I'd be completely sure that we'd go straight to TP. So yeah, right now I'm kind of just very, I mean, not very focused, but I'm trying to make sure that I'm handling this correctly, because I really wanted to close my position right here and just secure the profits, but a part of me said you'll regret it. And it's funny because I ended up hitting full TP, and I was super glad that I did. And the aftermath is absolutely beautiful because my TP was to the pip and then it reversed. So let's see. All right, so right here, this is where we get the final push. I said in the Discord, if we push up, take out these highs, and ES follows, and we break through this 2 to 2.5 area, we're going to TP. And as we can see right here, one minute candle goes straight up, takes out those highs, the same on ES, and we broke through the 2 to 2.5 area, and we are essentially just a couple minutes off TP. Right, and right here's where the magic happens. 3, 2, 1, and boom, we grabbed full TP, beautifully took out those equal highs that were my drawn liquidity for the day. As you can see here, the profits, TP1, TP2, final TP, absolutely beautiful. And now I'll hop on the charts and show you guys what I saw, why I took this trade, and the reason for my TPs. All right, so we are now on the charts, and as you can see right here, the trade. I'm also going to pull up my execution so you can actually see. Entered right here, one contract off on this candle right here when I hit TP, one contract on a TP right here, and full TP right there from the equal highs, as you can see right here, to literally the pip slash tick right here. And then price, now it's, I mean, now it's not looking too great, but it was absolutely perfect. So let me go over what I saw and why I took this trade. So if you haven't seen my daily bias video where I show how I determine my daily bias, oh my god, let's get that out of the way. So on the daily time frame, we had, the 4 hour. On the 4 hour, we had taken inverse 2 bearish for value gaps, and we had tapped into a bullish one. We also held good bullish SMT on these lows from this low to over here, and this wick to this wick. We also had bearish SMT that ended up. Actually, no, this is old. Yeah. So that's essentially where I got this from. I also have equilibrium from this range high to this range low, and this green line right here is where you see equilibrium. And as you can see, we practically tapped right into discount, and then we started going up. So that was bullish confluence for me. I'm not going over I'm not going over the whole how I determine bias. If you really want to know how I determine my bias, go watch my first and second video. I go in depth over how I determine my bias. So coming into the market, New York Open was right here, 9:30, and since London had already taken this high right here of this accumulation zone that I had marked, I kind of thought that today was just going to be a seek and destroy day, which it kind of ended up being, because we just destroyed everything in the market. So it was a little bit iffy on whether or not to take a trade. You wouldn't be wrong if today you said, damn, it's going to be tough to catch something here. You'd be surprised how right you are. Anyhow, I wanted New York, if I wanted a long setup, to at least take out these equal lows that I had drawn out. And as we can see, New York came straight for it. It looked at it and said, I'm coming to take you out, and it did. We ended up taking even more lows, and then right here we created bullish SMT. This is not only 1 minute, it's also on the 5 minute, and I'm pretty sure the 15. Yeah, there we go. So nice aligning SMT with my bias. Then we also tapped into this 30-minute fair value gap right here, which also is a 1 hour fair value gap, which also is a 15-minute fair value gap, and we tapped into this breaker block right here, and this was even more confluence. Then we also had this volume imbalance, which is actually the new week opening gap. I don't know exactly how to use these, but I kind of use them the same as imbalances. And then right here you see this 4 hour bullish fair value gap. We tapped in and then we got a bullish reaction off. So all in all, it was really bullish, or not really bullish, but I was bullish. Then scaling down further to how I took my entry. My entry model consists of inverse fair value gap, or a fair value gap getting respected, and then it gets inversed. So right here you can see price created this 1 minute fair value gap. We came in, tapped in, then we almost inversed it, and then we had a rejection off, created the SMT, and that's honestly where I thought, okay, we might come up and I might get my entry right here. So we ended up coming up, and right here we inversed this fair value gap. Now this would have been the early entry that I could have taken. However, like I said, I needed to get respected first before inversing, so I have a higher confluence inverse fair value gap to enter off of. So but this would have been a good entry too, but I just don't trust it. That's just not how I trade, and I won't be trading like that anytime soon. So right here, this candle, as you can see, is the one that inversed this fair value gap that I initially wanted to take my trade off of. So if I open my executions, you can see that I entered right as that candle closed. Right as the candle closed and showed me that this was an inverse, I entered right off right here. I got my entry. Now the reason for break even plus TP1 at this -1 area, which actually it's nice that aligns. This was a 1-to-1 right here. As you can see, it's a 1-to-1 risk reward, and that's one of my rules. At a 1-to-1, I'm taking off size for profits, and I'm moving my stop loss to break even or almost break even, just not too much in loss. So that helps with securing a risk-free trade. Then my second TP was these London highs, and this was just a beautiful draw on liquidity. As you can see right here, we just came in and we just took that out instantly. As you can see, execution right on the TP. Very good. Then right here on standard deviation, you can see we tapped into 2 to 2.5 area, and we just consolidated for a little bit. And if you're not familiar with standard deviation, this is an ICT concept. I don't know exactly how it works, like in its entirety, but the 2 to 2.5 area, all you really need to know is if you've marked it correctly, the 2 to 2.5 might have a reversal to the opposite side, or it might consolidate a bit and then go through. And I called out in my Discord, we were all looking for trades. I called out in my Discord, if we take out this high and ES does the same, and ES does the same, then we're just going straight to TP. And as you can see right here, this candle took out those highs, and pretty much two minutes, and then it hit full TP, took out those equal highs that I wanted to have as my final draw on liquidity. And as you can see, we pretty much got it to like the tick practically. So after that, we just got a big reversal, and I mean, I was glad I took my last position off right here. I could have left a runner, but I mean, it wouldn't really have mattered much because you can see my trailing stop would have already been hit somewhere around this area. Now, was this entirely high confluence? Not 100%, but this was an A+ setup to me, and ES was doing the things that I wanted it to do. Like there was a 5-minute that ES hadn't inversed yet, but NQ did. And then I just waited patiently, and I saw ES then inverse the 5-minute that I was looking for. And it was just, that's basically what I use in my trading, is I use the most correlation that I can, because I mean, if you trade NQ and and the ES, you know that they move extremely similarly, almost like literally exactly the same. So if one does something, you can expect the other one to do the same, or roughly the same. So NQ rallying and ES following just gave me that extra confidence boost, and that ultimately ended up me hitting this trade. I'll show the profits one more time. Now don't forget, this is paper trading, this is not real money, and the contract sizes, I'm not too familiar with them yet. So all of this, would I have made this on an actual account? Probably not, but I definitely would have made money, and to me that's all that matters. Or not necessarily all that, that sounds so weird, not necessarily all that matters, but when you're in a trade, you want to win the trade. That's self-explanatory. So I wanted to just come in and just give this trade recap. Was this a good trade? In my opinion, this is one of the best trades I've ever taken ever, and I've been trading for pretty much almost 5 months. So yeah, so that's basically it. Thank you so much for watching. Subscribe, leave a like, and comment down below what you thought, and let me know if you caught this trade. Let me know if you caught maybe this down move right here, and hey, I appreciate you for tuning in. Peace out.